Well, hello, ladies and gentlemen. This is August 2023 monthly market update. I am Callie Ritchie, your broker and owner over at Ritchie Realty. And today I'm going to take a little twist and not just go straight into what's happening in the Dallas Fort Worth market, which we will get to at the end. But I want to jumpstart this with something that's going to be a very hot topic that you're going to want to stay tuned for. And that is, drum roll, interest rates, mortgage rates. Like, what's happening with them? And we want to talk about what are the expectations. And now I have to say a little caveat. If I had the crystal ball and everybody could have a crystal ball, well, we wouldn't even need to have this conversation. But these are going to be the predictions of some of our major people with what's happening with what we can anticipate with rates going forward this year and going into next year. So I want to jump right on in and get started with that because I know this is something you're going to love, 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 love. So let's share my screen here and get straight into where are mortgage rates headed to and how quickly are we expected to get there. So let's go straight into that slide. You guys are going to love this. Now, where we are with rates right now, I'm seeing offers come in with about 6.75%, 7% rates, even 7.5% rates. So if looking at Fannie Mae, NBA, NAR, and going to that average, which you see over there to the right of your screen, we can see that for this last quarter, now we're in the third quarter, obviously, right now. So fourth quarter, we can see those rates having a little less pressure on the rates coming down in the fourth quarter of this year. Isn't that some relief? Some of you guys are like, oh, yes, that's great. Now look what those predictions are from the top three people here in 2004. Less and less pressure on the rates. So rates coming down. Now that I know everybody can just take a big deep breath and sigh. And I know you're probably thinking, well, I'm just going to hold out and buy a house when the rates come back down. Well, guess what? You're probably not alone. As a matter of fact, there's a lot of people that are thinking the same thing. And so here's the one caveat that I want to say right after I show you this great news is what do you think is going to happen when the rates do come down? Everybody who's been sitting on the fence is going to come off the fence, get back in the market, and there could be another upward pressure on home prices at that point. Right now, I'm going to go into a little bit more about what is happening and what's happening with people who currently own a home. Right now, we have less inventory on our market right now because we have over 70% of those who currently have a mortgage or less than 4% on their interest rates. And then you can see as we get over 4%, how many people are actually in those mortgages over 4%. So almost 3/4 of people in the US who have a mortgage note are under 4%. And they're not wanting to put their house on the market. It doesn't make any sense to them. As we can see from this next graph here, we can see those that are less than 3% are saying, not selling right now. And then as we get to 3 or 4%, probably not going to sell right now. And then if you're about 4 to 5%, maybe we'll think about it. And then those that are over 5%, probably, and yes, we'll go ahead and sell our house right now. So that has led to less inventory on our market, which has helped us to kind of balance that supply and demand kind of ratio here. Now, if we take a look at this, so 76% of buyers who would need to sell their house first before they can buy the next house, they say they're reluctant to sell in today's market because they prefer to keep their current interest rates. And I don't blame them for wanting to do that. And you probably wouldn't want to do that either. But the fact of the matter is that 1 out of 4 homeowners right now are considering selling within the next 3 years. So what do you think is going to happen when those rates come down? Like I said, we're going to see a big push into the market. You can see back in 2021, we had the stable kind of up and down of people wanting to sell their house. But since the rates went up last year to 6%, 7%, we can see that's where our pent up demand is. So if you've been on the fence, and you're thinking or considering it, you might be better off purchasing now before there's more pressure on prices. You can always refinance in the future and bring down your rate. Now, if you're in the real estate market, if you're a realtor like myself, Guess what to be prepared for in the next 3 years? That pent up demand is going to be coming out of the woodworks, and we're going to go through another crazy season. So why are mortgage rates so high? I'm not going to spend too much time. I'm going to dive into this on another video in the future as we go into a more deeper dive into why rates are high, talking a little bit more about inflation, talking about how it's affecting the showings and home prices. We're going to talk a little bit more about that in a future video, but I do want to at least kind of hit on some points here. And that is that mortgage rates are so high right now because of inflation. So if we look at right here, what are normal spreads? So rates typically follow that 10-year, the 10-year yield on the treasury yield. So on an average spread, they're about 1.72% higher than the 10-year treasury yield. Now, if we look at where we are today, we're at 3.08% higher of more of a spread. That's almost double than what it is in a normal market. So that's one prediction, one thing that we look at, and being able to predict that rates should be able to come down over the time as we get a hold of that inflation. So let me go straight to that slide really quickly, tier two. And at what point are people saying, hey, we're going to be okay, inflation's tamed where we want it, and now we can start looking at dropping rates? So they're going to want it to be at about 2% inflation. And the reason why is because right now we're about 3.1%. So we've come down a lot. We've tamed it down a lot. And some people would say, well, hey, why don't we just go ahead and release, cast a little less pressure on this? Well, here's why. Because historically, back in the 70s, what we saw is when we did see inflation go up and we brought it back down to, 3% here, guess what? It shot back up and then it went back up again. So history, we don't want it to repeat ourselves. So we went straight to, everybody wants it to come right back down to 2% before we're going to see that relief. Again, these are more things that I'm going to go over in a later video, but I know I want to keep this video very short for some of you guys. And end with what's happening with our sales prices here in the metroplex. So what we're looking at here is the data straight from our MLS for Dallas, Tarrant, Denton, and Collin counties. And we can see when we started off the year in this year in January, the median sales price was $290. We saw that spike up. And I know for a lot of you that were in the market, that have been watching the market, you saw those prices shoot up very drastically in the spring. And normally we do see prices start to go up in the spring, but look how much they went up to, 333,000. And now we have been over June, we saw those come down. And then in July, our median sales price at 320,000. And that's what I think a lot of our sellers and our buyers are paying attention to, is those prices coming down. And the predictions, if seasonal stuff happens, which it will, as school starts up in August and we hit it into the fall months, we tend to see a little bit of less pressure on the prices. So, but nonetheless, if we take a year to date inventory of where we were and where we are now, you can see we're over 10% appreciation. Now, we're not seeing depreciation. We're seeing a deceleration because we don't, this is just a month over month. We typically say, look at things at the end of the year. So year over year, are we appreciating? Are we depreciating? And so the statistics are we're going to, or the indicators are that we're still going to have appreciation this year, even though rates are high. So I hope this gives you guys some knowledge, some useful information that you can take back with you as you're trying to be the very best that you can on investing or buying or selling real estate, because it's probably going to be one of your biggest assets. And we here want to make you, help you be successful at doing those things. So now, if you ever have any questions, please feel free to reach out to me. Know that every market, even in the metroplex, is different, and price points can be different. So this is just a general look globally what's happening, and then also here just in the metroplex. So I want to end by saying, hopefully you guys have been seeing the triple digits, and hopefully you're staying cool. And so if you want some cool conversation, you know where to find me. Until next time, I would love for you, if you guys will comment below, tell me where you're at, because I know we've got a lot of people from around the US that tune into this. Maybe you're getting the newsletter, maybe you're seeing it on YouTube. Nonetheless, I would love for you to comment below. Let me know where you're at. Let me know if you have any questions that I can answer for you in the future, but make sure you stay tuned for that next video as we continue to help educate everyone around us to be the very best that you can when it comes to real estate. Again, I'm Callie Ritchie, and thanks for tuning in. Bye-bye.